Good evening, friends. Namaskar. Today we will look at the Q4 results and the annual results of Vikas WSP. Many friends are asking, so there has been some delay on my part. But anyway, let us see the Q4 results. At the outset, I would say these are reasonably good. There is no reason for any despair or whatever. Now let us see the results. The net sales for the Q4 is 219.6 crores compared to the previous quarter's 201.7 crores, which is an increase of 8.84% quarter on quarter. And last year same quarter 214.9. There the year-on-year increase is 2.16%. So net sales increase is not very great, but there is increase. There is no decrease. Let us see that. Net sales are increasing but gradually. Raw materials 186.7 crores in the Q4 compared to 162 crores in the previous quarter Q3 compared to 179 crores in Q4 of last year. So the increase is 4.35% year on year and 15.29% quarter on quarter. So raw material cost is okay. Employee cost 11 crores in Q4 compared to 9 crores in Q3 compared to 6 crores in Q4 of last year. So there has been an increase of 85% year on year and 20% quarter on quarter. So employees cost has increased considerably. So that has probably reduced the profit to some extent. Employees cost has increased in the latest quarter. But this is also a balancing figure, let us see. Generally employees cost will not be a balancing figure, it will be accurate. Other expenses. Other expenses have also increased slightly. Now it is 3.23 crores compared to 1.2 crores in the previous quarter compared to 1.44 crores in the Q4 of last year. That is, there is an increase of 124% year on year and 169% quarter on quarter in other expenses. Then other income. Other income has come down drastically. It is 0.48 crores in the current quarter compared to nil in the previous quarter and 4.88 crores in the Q4 of last year. So there is a significant decrease of over 4 crores in other income. Now interest. Interest is 0.55 crores compared to 6.3 crores in the previous quarter and 14.89 crores in the Q4 of last year. Now here we need to understand interest is a balancing figure actually. See, salaries may not be a balancing figure mostly, but interest is a balancing figure. So they have paid some interest, they have booked some interest in the earlier quarters. So probably they have overbooked in the earlier quarters and now 0.55 crores only is the ultimate figure. Now profit before tax is 12.85 crores compared to 12.61 crores in the previous quarter and 10.14 crores in the Q4 of last year. So there is an increase of 27% in profit before tax, 27% increase in year on year basis and 2% quarter on quarter basis. Now let us look at tax. Tax is a balancing figure. See, it was 1.55 crores in year Q4 of last year, 3 crores in the previous quarter and minus 4.95, that is right back, minus 4.95 crores in the latest quarter. It's a balancing figure obviously. So the net profit has shot up to 17.79 crores in the current quarter compared to 9.61 crores in the previous quarter and 8.59 crores in the Q4 of last year. So, at the net profit level, 17.79 crores compared to 8.59 crores of last year. There is a 107.1% increase year on year and 85% increase quarter on quarter. See, net sales increase is there but not much. Net profit increase is sizable and that is accounted for by less tax provision, less interest provision. But these are, see, we should not assume that the companies are not providing for tax or interest. They are providing. It is a balancing figure. They have provided extra in the previous quarters. Therefore, they are providing less in the current quarter. That is what is meant by balancing figures. Equity share capital has increased slightly from 19.44 crores in the last year to 20.44 crores. Now, basic EPS is 0.81 against 0.49 in the previous quarter and 0.44. Impressive. 84% increase in basic EPS. Market price is currently less than 16. So, price earning is 4.9. 4.9 is too very low, you will agree. Actually, the price should be much higher. Suppose you assume that the price will go up to 25, which was the highest earlier. Even then, the price earning ratio is 7.7. So, that is still low, which means Vikas WSP has scope for growth. Now, the volumes for trading are, around 2 lakhs, so there is no problem. 52-week low was 8.62, 52-week high was 25.80, face value is rupees 1. So, my personal feeling is price earning at present is very low. Depending upon your estimate of its future functioning, now price earning can be around 10. Now, if it is around 10, the price should rise to 30 or something like that. Now, currently the valuations are very low because market perception is low probably. So, therefore, it is continuing. But if Vikas WSP grows its sales a little more, which is quite likely in the coming quarters, and there is a lot more amount to come. US courts are taking some time, that is quite natural in the courts, but maybe in 2 months or so they will finalize and company may get that amount. But that notwithstanding, I feel Vikas WSP should increase its sales much more than at present. Now let us look at the, so the results are not bad at all. These are balancing figures, but they are not bad. Taking the balancing figures into account, net profit has risen by over 100%. EPS has risen because equity also has risen. EPS has risen by 84%. So it is okay. Interest has come down. Other income has come down. So that is how it has functioned. Now let us look at the annual figures. Current March 19 year, March 18 year. Total income is 799.98 crores in the current year compared to 696 crores only in the last year. So there is a significant increase in the income over the past year. Raw material cost has also grown up. 561 crores last year, 687 crores current year. So there is a growth. So sales have grown, raw material cost also has grown. Employee cost has grown, reasonable. Latest quarter it has grown. Other quarters there was no growth. Other income has grown by 20%. Other expenses have grown by 44%. Other expenses have not grown. They have come down actually. Employee cost, employee cost was 18.83 crores in the previous year. Now it is 35 crores. So employee cost has grown sizably, especially in the latest quarter. That's what we have seen. Other expenses have come down from 15 crores to 6.7 crores. Other income has grown from 4.88 crores to 30 crores. But only the balancing figure has been booked in the current quarter. Interest has come down. Look at that. From 46 crores to 21 crores, interest has come down. So profit before tax has gone up. Previous year 26 crores, current year 46 crores. There is no tax. Net profit is 29 crores last year, 47 crores current year. So annually there is growth. Growth in sales is there, growth in raw material cost is there, growth in other things are there, but overall profit before tax has increased by nearly 80%. Net profit has also increased by a similar amount. Equity share capital has slightly increased. So basic EPS from 1.49 to 2.32, there is an increase. Now let us take a look at the balance sheet also. The non-current assets approximately have come down slightly. 993 crores was last year, 965 crores only current year. Now trade receivables, 450 crores last year, 525 crores current year. Trade receivables follows the sales. So from what we find in the trade receivables, it seems some 2.5 months sales are always receivable. So the average paying period is something like 2.5 months. It looks like that. It is quite reasonable in this sort of business. In fact, it should be more. 3 months is generally allowed. 3 months for paying. The cash is not much, 0.57 crores in the current year, 0.36 crores in the previous year. Total current assets are 705 crores current year, 660 crores last year. Long-term provisions, 5.76 crores in the current year, 3.6 crores in the past year. Borrowings have actually come down. 182 crores last year, 155 crores in the current year. Trade payables, 128 crores last year, 90 crores in the current year. So which means the company is paying promptly. Overall, the balance sheet also is reasonably, it looks reasonably healthy. There is nothing much wrong with that. So trade payables have come down, borrowings have come down, long-term provisions, there is nothing much. Trade receivables is about 2.5 months sales, it seems. 2.5 to 3 months, something like that. So it's okay. See, 219 crores is the sales per month. Now here trade payables is hardly 525 crores. So 4.5 to say, let us say 3 months. So trade receivables is not alarming. So overall, the performance of Vikas WSP is okay. Now we are only hoping that they will increase the sales further. They are trying their level best, and let us hope they will be able to increase the sales. Let us hope they will also be able to get their amounts back. So we have seen the quarterly results. We have seen the annual profit and loss account. We have also seen the annual balance sheet. All are reasonably okay in my opinion. So they are not defaulting in interest payments. They are not defaulting in trade receivables, trade payables, etc. They are not defaulting in trade payables. Their trade receivables are also reasonably healthy, less than 3 months. So there is no problem. Company is healthy. Thank you for listening. I will come up before you with another good company.